What should I refer to you as? DeFi Dad or?
DeFi Dad, yeah. And
I didn't know if call you your real name or not.
No, I don't have a real name. I'm just DeFi Dad.
Right, okay.
Hey, everyone. Thanks for tuning in. You're watching episode 73 of Yield TV. Poor Chad. You're like, should I call you Dad? Is that going to be weird?
Papa?
Yeah. Hey, everyone. Thanks for tuning in. It is Thursday, February 11th, 2021. And today we're going to talk with the technical lead of ThorChain. So in case you haven't followed ThorChain or if you're new, we're going to clearly dive into it today. But very briefly, ThorChain is an independent blockchain that aims to enable the exchange of assets across different blockchains. So, I clearly focus more on Ethereum and Bitcoin. This would be a non-custodial way of me moving assets between the two chains and other blockchains in the future. So really excited to dig into this. I do believe interoperability is it is the future of DeFi. And so anyways, Chad, welcome to Yield TV. How are you doing?
Good. Thanks for having me on.
Awesome. I don't know if I said your full name, but it's Chad Barraford. So yeah, Chad, let's start out with the usual. Let's talk about when did you actually get into crypto, and then what led you to start working on ThorChain?
Yeah, I got into crypto. It was in 2017. I think I bought my first Bitcoin in like October, I think it was. And around then I was living in Boston, and I just kind of felt like I needed to restart in a sense. And so I just basically sold everything I owned, and I started to travel around the world. And I met these two guys in Croatia who were big like ETH heads, and they started telling me about, okay, let me like talk about like Bitcoin and Ethereum and like all these things. And I was just like, oh, this is fascinating shit, And so as an engineer, I was very fascinated by the technology and how it actually functions underneath the hood. And so I decided to build a blockchain from scratch, just roll it right from nothing, just to better understand how it works. If you want to know something that works, roll it yourself by hand and you'll figure it out.
Absolutely.
So then I was just like bitten by that bug. And I was just like, all right, I'm like heads over, like I'm gonna do this. And so then I quit my job like a few months later. This is like in December 2017. So like I was like on high, like I'm doing great.
Yeah. Sorry, everyone. Screw you, boss.
Hey, boss, I quit.
I quit. Yeah, everything's going my way. January. Everything's going my way. It's February. I'm not sleeping. I'm waking up in a cold sweat every night. What's going on?
Everything was going to be fine. No. Obviously, crash happened, and I got some work and all that stuff. But I got really into crypto. I started building stuff from that point on. And I just traveled the world for basically 4 years, something like this. I lived in over 25 different countries in that time period. Wow. Just like
cool.
Asia, South America, Africa, Europe, like pretty much everywhere you can think of, more or less. And so I was interviewing, and this is how I got into the ThorChain stuff. I was actually interviewing for a different job to become the CTO of a different blockchain company that was going to do like airspace control for like drones kind of thing. And so one of the advisors of that project was that the CEO and the advisor were going to be in Berlin for the Cosmos hackathon. This is like in mid 2019. And so I actually was living in Berlin at the time, just purely coincidentally, right? And the hackathon was happening again, like the next week, right? Like purely coincidentally, the next week was happening. They're like, just come out to the hackathon with us, hack with us. We'll talk, we'll chat, we'll see if you're a good fit for this company, whatever. And so I came up to the hackathon, and me and this advisor started hacking back and forth on this new idea of like swapping assets across chains and this kind of idea. So we started just kind of hacking at that point. And then that was like the very first lines of ThorChain. We ended up being like, winners or finalists, or the right term was, in the hackathon, which was really cool. And then, the rest is more or less history.
Wow.
And now we've it's about a year later, year and a half later, whatever it is, about a year and a half later. And we're weeks away from launching the original promise of the white paper.
Wow. It's remarkable to go back in time like that and think like, I mean, there was so much that was pie in the sky at that time. So anything that was actually being built that was usable or that has become usable, like that is rare than people realize. You know, we're sort of living through a heyday this past year of, you know, we have real DeFi applications that work. Even when fees are high, stuff still works.
Yeah.
And to see, I mean, we're going to dig more into this, but like, I remember learning about ThorChain, I think it was mid 2020. And I normally clearly only pay attention to like Ethereum related applications and protocols. It's hard to keep up with everything.
Yeah,
but
sure.
This, like Ren, really caught my eye because it was like, all right, I mean, I feel like the community ThorChain has been smart in the way that you interface with other blockchain communities, especially Ethereum. Like there's a way to go about it and say like, hey guys, why don't we grow the pie together? And like that approach is so different than, hey guys, we're here to nuke shit and we're going to replace you. So anyways, kudos to you guys on that. That's what really caught my eye was the community. Let's talk about then, like, what is live today? I want to make sure we highlight like what's special about ThorChain, what differentiates you, but a lot of the people that watch are very interested in using. So what is available, and maybe you can start screen sharing. We could even talk through it.
Yeah, sure. I'll screen share.
Here we go. And once you pull that up, I'll let you know once I pull it on screen here.
All right. Application window. Let's see if I can finagle this without giving away my private key.
Okay, yep. So I'm going to add it right now. I can see it's like a little square box. Here we go.
Switch over to Chaosnet here.
There we go. Cool. Yeah. What? Actually, let's start there. Chad, what is Chaosnet?
Okay, so Chaosnet was kind of, I see it as kind of like a proof of concept in a sense. So we wanted to launch something early, just as a way of proving to the community and to the greater world that we have code that actually works. It's not just all smoke and mirrors and kind of, talking a big game, but delivering nothing like some chains do. I'm not going to say which ones, but you can probably think of a few yourself. And so we wanted to deliver something to show actual real value and then prove the economics, prove the math works, prove that the technology works, prove that we can secure large amounts of funds by a decentralized group of individuals who are completely anonymous, that nobody actually knows who they are, including myself. So, and that's never been done before, right? And right now, if I go over to one of the block explorers, I'm not sure if this is too small for you to read or not.
If you just zoom in, yeah, there we go. Perfect. I can see it.
Right now, the total TVL of the network is $261 million.
Nice.
That's a huge amount of money that is operated by anonymous individuals, right? That's never been done in the history of crypto ever, right? Of being able to manage funds across multiple people anonymously. That's pretty crazy. But this kind of technology, or this launch of Chaosnet, is just to kind of prove the general concept. And our Chaosnet only supports one particular chain, which is Binance Chain, at the current moment. And why do we choose Binance Chain over Ethereum, for example? Which is a very good question we get often. There's a few reasons for it. One of them was that Binance Chain was going to be easier to interface in for like a very first step because they have instant finality. It's very, you don't have to worry about like reorgs or anything else you see like on Bitcoin or other POW chains. And every asset on Binance Chain is effectively the same. Whereas on Ethereum, you have ERC20s, which is one thing, and then you have ETH, which is a different thing. And then technically you have other things as well, which is even adds more complexity. We want to integrate with Ethereum. In fact, we've already done the work. It's actually already completed. But for our first launch, we launched this, I think it was like 5 months ago, around there. We wanted just to get something out there to the community, just to show that it works, show the economics, show that it's secure, and that funds aren't getting leaked or stolen on these things, which I think we've done that kind of in droves, if you will. So I'll just to show an example of how it looks here. This is chaosnet.bepswap.com. If you want to use it at home, you can. I'm going to connect a wallet. You can do 3 different forms right now, which is a key store file, which is kind of Binance specific, sort of, not really, but it's heavily used by the Binance community. There's a ledger. If you got a ledger, you can use that, or Wallet Connect. And this is what I'm going to use on my wallet here. Let's see here. All right, Wallet Connect.
And while you're pulling this up, just reminder to everyone, we'll talk about this, but as you stated, this is on Binance Smart Chain, but we will eventually have what is a ThorChain blockchain that allows you then to be interoperable across all of these. So this is kind of a short-term solution to, like you said, demonstrating, hey guys, this works. And actually, before the end of this, we'll talk a bit about the economics behind Rune. Like, I think it helps to understand, like, how do these swaps work right now? It's very reminiscent to me of Bancor. I understand you guys, some of that code from Bancor is what's been implemented here.
Oh, absolutely not. We have taken no code from Bancor or anything, any of them.
What is the Chad though? What is the gosh? What was it? I had read. I had down that you use an adapted version of Bancor smart tokens. Is that no longer true, or maybe I've got like an old description?
It might be an old description. I honestly have no idea what you're referring to.
Oh, really? Oh, okay. Well, you know what? Not to throw him under the bus, but I'm sorry. I guess you got the facts wrong, and now I got it wrong. But glad we corrected that. That is funny. It would have been funnier if I would have read it off at the beginning, and I was like, and anyways, then they use. And you're like, that's not true. That's wrong. So, okay, cool. So yeah, all of this code, as you described earlier, then has been built from scratch, whatever you want to say. This is all niche.
We're a Cosmos app. We're built on top of the Cosmos community, right? So
yeah.
It gives us like kind of that blockchain framework to build the app on top of. So it's not like we rolled everything from scratch in a sense, but like, yeah, none of the actual code we run is, everything we run is open source code that we just built on top of.
Excellent. It's just, I'm like smiling because I think it's like funny. I'm like, and by the way, and you're like, nope, that's totally wrong. So, we're looking at BepSwap here, and how does this work? Like, it reminds me a bit of like, so I've used this before, and it reminds me a bit of like Uniswap, but in this case, we're using Rune is in every single pairing. Yeah,
I mean, it conceptually has a lot of similarities to Uniswap, right? If you're familiar with Uniswap, and I'm sure a lot of your viewers are. There are some big differences between the two, and other than it being cross-chain, so you can swap Bitcoin to Ethereum, Ethereum to Ripple, Ripple to Bitcoin Cash. It can support, in theory, any chain out there that I'm aware of. But also, like, there's some differences in terms of how it's designed. So, for example, on Uniswap, you can have pairs. You can have Ethereum, ERC20, USDT, for example, or USDT with USDC, or this with that, with this. But if ThorChain's a bit different because every pool is comprised of 2 assets. One asset is always Rune, which is the kind of the base token of the network itself.
Yep.
And then one is the other asset. Could be Bitcoin, could be Ethereum, could be whatever else, right? Uni, doesn't matter.
Right.
So that's one of the differences, and so that means that you're always 2 swaps away from getting from any token to any token. So if you want to swap Bitcoin to Ethereum, for example, you would send in your Bitcoin, and then it would get swapped to Rune inside the network, and then the Rune would be sent to the Ethereum pool and swap the Rune into Ethereum, and then the Ethereum would go out into your OX address, wherever that might be, right? So we want to make sure that the liquidity is kind of like in one pool, so that very deep pools instead of these very many very shallow pools. You want these one pool that has all the Bitcoin to it, or all the ETH, right, or all the Binance coin, whatever it might be. By doing so, we're actually able to do that in a way that we have a different fee model that yields cheaper swaps than Uniswap, but also yielding higher returns for liquidity providers, which is counterintuitive. Like, how can those two things be true? It's very counterintuitive, but we had it confirmed by Gauntlet, who did the same economic review of Uniswap v2. They reviewed our economics to confirm that the math is right, that it actually does make sense. So how that actually works is, on average, the average fee will be, let's just say 10 basis points, for example. whereas on Uniswap it's set to 30. But if you want to do like a huge swap of like massive amounts of funds, like you're a big whale, you might do 50 basis points or 70 basis points, depending upon how big your trade is. So the fee is relative, is a slip-based fee. So the higher the swap is relative to the depth of the pool, the more the fee will be. But for most people who aren't whales, you probably pay a much less fee in terms of slip fee on ThorChain than you would on Uniswap. But if you provide liquidity to the network and provide Ethereum and whatever other tokens out there, then you'll probably earn more rewards because of that slip-based fee, right?
Very interesting. So like to dumb it down even further, if I'm doing a larger swap, is it always true then that my fee will be that much larger, holding all other things equivalent? Like, so larger, if I'm a whale, I have a larger amount. Let's say I'm doing 10 million versus someone doing 1 million. My fee should be that much more then. And we're talking higher in terms of basis points, not just the absolute amount.
Like it's sort of, let's just give like a rough number example here.
Yeah.
Say you're trading $10,000 worth of something.
Yep.
And let's just say for that pool, you end up paying, 20 basis points, just making up a random number here. If you were to swap $5,000 instead of the 10,000, you would pay probably like 9.2 basis points.
I got you.
If you swap twice, in like 2 different transactions of 5,000 each, together you'll pay like 19.5 basis points. Versus if you just did one swap at 10,000, you pay like, 20 basis points. So you pay higher in fees. So you can actually choose how much you want to pay in fees by breaking up your transaction into smaller pieces and chunks.
Interesting. Yeah, I remember reading about this early on when I was first like learning about ThorChain, and it's funny, I hadn't thought about it until now. So yeah, that's cool. It makes a lot more sense to me now that I've seen it live and kind of have it dumbed down with you.
We can even like on the screen here, so even show this math in real time here. So say I was going to do some massive trade here. I think it'll, what do you know, let me calculate it because it's, I don't even have that much room in my wallet. I have like basically nothing in my wallet because this is a temporary wallet.
There's a Delphi dashboard for this too, right? Like
I think there is. They have a dashboard. There might be a calculator. I think it might be somewhere. Maybe in the pool section. I remember seeing it one day, slippage calculator.
I know, yeah, that's it. Oh, there we go. That's it.
Let's do BTCB, for example. We're gonna buy root amount. Show results. Let's do a lot more than that. So if I'm gonna swap, what is this right here? 100,000 room, which is worth, around $500,000 right now.
And yeah,
I would pay a 6.56 slip on that transaction. But if I cut it in half and do this, it's 3.31, right? So it was 6.56. What was it before? I forget what it was before.
6.5. It was about double. It was, yeah. 6.56.
It should, in theory, this calculator works correctly, which I've never actually tried this calculator before, should actually reduce the slippage. 1 point is the 6. Maybe this calculator could be not correct. I've actually never used this calculator before. Anyways, maybe this calculator is incorrect, but I'm pretty sure this works.
But point is, even if I'm not sure if the calculator is working correctly either, but I get it. Like larger amount that you're trading, especially in a shallower pool, you're being incentivized to not do that large of a trade, to do a smaller one, which is, again, I remember reading about this. It's interesting. I remember because I want to say you guys took a lot of heat, like trying to like describe this mechanism, and this was before, of course, it was implemented and that you could actually like see it live, which was the point of the last 5 to 6 months, is getting something working so people can actually see it in action.
Yeah, we definitely got a lot of heat. People said, "Oh, you can just exploit ThorChain by breaking up into smaller chunks and then transacting. The reality is that actually doesn't really what happen. Like people are impatient. People don't want to split it up into 1,000 transactions and sit there all day and do that. People are, money effectively moves from the impatient to the patient. That's how
that's a good way to describe it.
In general. It doesn't matter what market we're talking about, whether it's traditional finance or crypto. Money, generally speaking, moves from the impatient to the patient. And this is kind of an example of that. Now, you can even go to, let's see here. If I go to the Explorer here, and I go to assets, I think this will work.
Chad, am I able to, so could I trade directly from, I'm trying to remember, because I did a trade recently. I used the equivalent of Bitcoin and Ether, and I went from some Rune to that. So I'm trying to remember though, can you go directly from like BTC to ETH, or do I have to do like Rune to, what am I?
No, you don't have
to Rune.
You don't have to. You can go directly from BTC to ETH.
Okay, right? Good.
But
okay,
yeah. Background, like on the network, like in the underneath the hood, what's actually happening is you're doing 2 swaps, right? But it's not getting swapped to you and then you're going to swap in. It's just going right back to you like this. So like you're taking your Bitcoin and then you receive ETH on the other side. You never actually touch Rune at all. You don't even need a Rune wallet, right? You don't need to hold it. All you need to do is have a Bitcoin wallet and Ethereum wallet. You're good to go, right? But in reality, what's happening kind of behind the scenes is that it is swapping it to Rune and then taking that Rune, swapping to the next pool, and then you get sent your ETH on the other side of it.
Yeah, absolutely. So, Chad, with what we're looking at here with BEP-swap, and sorry, I actually interrupted you here with, I think you were going to make another point.
No, I was going to say, like, if you go to one of our block explorers, and this is built by the community, you can see the average pool fee and the slip fee and how many basis points people are actually swapping for. And Bitcoin is one of the bigger pools, and so you would have a tendency to have smaller fees. But if you go to like a smaller pool, like Trust Wallet token, for example, I think it's a relatively smaller pool, the average slip is significantly higher, right? And people who use Trust Wallet token, they can get smaller fees if they choose just by breaking into smaller chunks and doing that. So, but in reality, like this is economics working in reality. You can't not argue with reality. You can go to the chalkboard and whiteboard and argue. But this is the data. This is what reality is. This is what's actually happening. So your argument kind of falls apart at that point, right?
Yeah.
The slip fee is higher on more shallow pools, even though people have the ability, if they really want to get a smaller fee. The reality is that they don't, right?
Yeah, very, very interesting. I didn't realize that too, and like I said, I had used it. I guess I probably just don't do large enough trades to feel the pain of any of that. But yeah, super interesting to know that, like just being able to break that up into smaller chunks, and the reality of that human behavior you described. So with BEP-swap, you can trade, or you can of course be an LP. The LPs are earning rewards every block, right? There is something beyond just the trading fee, or are those specific areas?
Yeah, this is one of the differences between us and other situations is that Rune is actually, within the Rune, the ThorChain network, there's a reserve, which when we launch mainnet will probably be around 200 million Rune, which is a lot of money. So that is basically the reserve that basically gets secreted into the pools every block, right? How much is secreted is relative to like the economic value that a particular pool gives the world, right? A ETH pool will be much more utilized than this, Trust Wallet token pool, for example.
Right.
So the ETH pool will get a bigger share of that than the Trust Wallet token because it adds more value to the network, right? So you are basically collecting Rune effectively on every block. There's a block reward effectively that gets dumped into the pools, which also gets benefits the node operators as well, the validators of the network itself. So you get the value of having the swaps, but you also get the value of the block rewards. In the future, we may have even other forms of revenue stream for people to even increase that ROI on providing liquidity.
Chad, maybe this is a good time to, and by the way, too, no pressure if, I don't know if this is something you'll want to screen share or whether we just talk through it, but maybe talk through some of the tokenomics behind Rune, because I'm trying to remember, it's like, what is it, for every asset that goes in, there should be like 3 times as much value of Rune. And anyways, wondering if you can break that down for me, like how Rune is actually used.
I'm sure we have like I'm not even sure where in this thing it is. We have a doc somewhere or like an illustration that would make it a little bit easier.
I did enough preparation to be able to like ask questions, but then when I get to the point of asking it, I was like, let me clearly demonstrate I don't know what I'm talking about. And Chad.
Well, I think it's in here somewhere, but I forget which section it's in. We don't necessarily need it. So basically, how that works is I'm just gonna. Wish I had that visual guide that I had before. Maybe it's under Rune somewhere, but I didn't see it here before. But basically, how it works is that you have 2 types of people that are providing to this network, right? One is the liquidity provider who is staking assets, and it's typically going to be 2 assets, can be Rune and Ethereum, let's just say, for example, and they're going to provide equal amounts of Ethereum to Rune value. So if you get $100 of Ethereum, you're going to put $100 of Rune as well. Now you don't have to do that. You can put just Ethereum or just Rune if you really want to. There are economic reasons why you wouldn't want to do that, because you start off at like a hit in a sense, at a negative. Because if I provide $100 worth of Ethereum, the network actually needs the other 100. So if I don't provide it, the greater world will see a market opportunity and provide it for me, but at my cost. They'll take some of my ETH, not in a literal sense.
Kind of like a swap. Yeah, almost like an underlying swap that happens anytime you do single-sided deposit. Even on Zapper, I mean, we're just swapping tokens for people, so you're losing a little something there.
Right. So you'll provide that, and that's part of it, right? That's the first kind of individual. The other individual is the validator, right? The node that's running the actual physical network in a sense. And so they're providing a bond, which is just purely Rune, right? And so the bond can be whatever it is. Right now, and I can show this right now while we're talking about it. Right now, there are 72 nodes in total on the network. 36 are active at any given moment. And these are all the different nodes. And these are the standby nodes here. Now they're waiting to be churned into the network, and this is how big their bond is, right? The guy with the biggest bond basically gets selected to be churned into the network, right?
Can you zoom in on that, Chad? Just I can kind of see it, just in case others can't. There we go.
Yeah.
Okay, so that's 1.15 million Rune.
Yes, exactly. So the cost of what it costs to run a node is determined by just capitalistic markets, right? Like we're not setting as a team; the world is setting it by their own mechanism.
Interesting.
So this guy is the top guy to be churned into the network. When we do our next churn, which is going to be in 2 hours, apparently 2.5 hours, whatever it is, he's going to be churned in probably with at least 2 other people likely. So that's 1.15 million Rune, which is, close to $5 million, right?
Got it. Yeah.
Running on this for real.
Quite a bit of money. DeFi Dad won't be running a node anytime soon.
If you got in early enough, you could probably do it, or if you got bagged, you could probably do it. But these individuals make a lot of money on the system, like a lot of money.
Yeah. Is there any sort of estimated revenue for running a node? I know it probably matters, like what their setup is.
It fluctuates when network is optimal. Right now, it's not optimal. It's over bonded, which is actually a good thing. It means that the underlying assets, like the Bitcoin and the Ethereum, in a manner of speaking, are like really secure, economically secure. When it's optimal, the validator nodes earn about 30,000 Rune per month, which comes out to be a good amount of money. At a lot of money. $4.50 right now.
Yeah.
Wherever the hell that is, 30K. Comes out to be $135,000 a month to run a node.
Yeah.
Right, that's a lot of money. That's why it's so expensive to get in, because people want to get in. Right?
And that's based on, to reiterate, that's based on the market price today, because there is, part of the tokenomics behind this is to accrue value to Rune. Like, that's what makes the system actually work. So one, holding that, I mean, it's in a sense, it's, I think, similar to, the two most successful blockchain networks with Ether and Bitcoin. I would not going down the path of like talking about the security of Bitcoin and Ethereum, but like everything else, like these assets accruing value, it works, and it works too because I think it attracts that much more attention to the actual network. So, anyways, to
that point, Rune's primary purpose, like Rune is not money, Rune is not a utility token, Rune is not these things. Rune's primary purpose of why it exists is to create the economic security of the network, right? To ensure that if I'm a bonder and I have a node that's like, $5 million, let's just say, or whatever the hell the number is, right? That the assets that I have access to are always less than what I have at risk, right? So I can go ahead and buy $5 million of Rune to steal $2 million of Ethereum, but then lose my $5 million. It's like, well, then you just kind of fucked yourself now, didn't you?
Yeah.
So it's not relying on purely the threshold signatures of how those underlying assets are being secured. It's not purely relying on the technology of it all or the security of like the code per se, but also just the economic value to make sure that you never have access to more funds than that you have bonded yourself. That's why the bond is so high at like $5 million, right now, is because of that reason, right? Now, like say Rune goes to $10 tomorrow or $30 in a few months, or whatever the hell the number might be. The amount of Rune that you get is more or less the same, right? So the dollar value of your running a node kicks up pretty nice, But anyways, so you have on one side you have the validators, on the other side you have the node operators. Now the network has an incentive pendulum that all incoming profit, all incoming revenue the network generates goes to a system income. So let's just say in a particular block, let's just say it's like $1,000, making up a number, right? The amount that the network will give to either one of these two parties is relative to this bond right here, this security status. Right now it's over bonded, which basically means that the validators of the network are getting less money and the liquidity providers are getting more money, right? So as like the economics change of how much is bonded versus how much is staked, the revenue or the interest that you make on your whatever side you're on changes relative to that number. So it ensures that that we always pretty much go towards a two-thirds of Rune being used for bonding and a 1/3 of the Rune being used for staking. Because if it gets out of whack from that, just the incentives of the network, the revenue of the network pushes it back towards that middle. Right now, we're actually a little out of the middle. We're over bonded, which is actually positive for the network for its security. But the tendency is that now validators are making 10,000 Rune a month instead of $30,000 Rune a month, and that extra 20,000 Rune is going into the pools to the liquidity provider. So they're making bank right now because the network is over bonded. So that kind of pushes it in that way, right? So the reason why Rune's price is relative to its assets is because of this reason. Because whenever somebody takes a pool, like Bitcoin pool, for example, and they put in like one BTC, they have to find and buy the Rune for the other side of it. And that inherently pushes the price of Rune up. Has to. So if you assume that 1/3 of the total Rune, circulating Rune is staked and 2/3 is bonded in this kind of scenario, then the market cap of Rune is always 3x whatever is staked in the non-Rune assets staked in the pools. All the Bitcoin, all the Ethereum, all the Binance coin, all the USDT, all these things combined, multiplied by 3, that's Rune's market cap right there. Mathematically, that's how it is intended to be. Now, it can be 4x, it can be 5x, it can be 10x relative to if there is some room that's not being actively used on the network, someone's just hodling it in the wallet, down in a dungeon somewhere, that actually increases the ratio between stake to market cap of Rune. So this is a very interesting kind of aspect of Rune, is that, like, unlike other cryptocurrencies, it's not necessarily really a speculative asset, and that people can debate, argue what the price of Bitcoin is or Ethereum is or what it should be even. It's actually definitively determined by the speculative assets that are underneath it, that are actually staked into this network.
Yes, and I am clearly still newer to this, but some of the elegance of the design reminds me a bit of like some of the bonding curves that I've looked at before. This is not that, but similar, as in, like, there's some clear, like, math and forces that drive what is the price versus us just saying, hey guys, buyers and sellers, tell us what the price is. I mean, at the end of the day, still, I guess, as these tokens trade, like, buyers and sellers will tell us what the price is. But I'm curious, can you look up that number right now? I was just kind of wondering, like, so if you look at all the non-Rune assets and we just were to quickly calculate, like, where is the market cap there? Just kind of curious, like, if it's following that rule right now, or if it's over under that.
Yeah. I think if we go to here and then we go to network, we can see, let's see here.
And reminder to everyone, we're looking at ThorChain.net. So this is separate from ThorChain.org. This is a community-built website.
Yeah. So this one's going excuse me. This one's going to tell me how much is pooled in the total value of what's pooled in the pools, which is 33. See if I can do this on my task book and follow at home.
Yeah, sorry, put you on the spot here. Just out of curiosity, because I remember hearing you talk about this with Tom Shaughnessy, and I was like trying to pull out my phone to be like, what is the number right now? Is it above or below it?
Yeah. So I'm assuming that the 33 is total pool, being both the asset and the Rune. So I'm just dividing it by 2 here. We get this remaining number here, which is basically the dollar value of the Rune that's in there. So we take that, and what is the ThorChain's current price here right now? It's at 452. So that is the current price divided by,
here we go,
2. Well, it's about what is that, 3.6 million? My eyes do me.
Oh yeah, 3.6. Yeah, about 3.6 million. Is that right?
I think so. Rune. And then the circulating supply is actually CoinGecko. That's the correct one, because CoinGecko has the wrong circulating supply. It's been that way for months. We just haven't been able to get them to update it correctly.
Yeah, I'm sure it's Chaosnet. I'm not one to defend CoinMarketCap, but I'm sure I know CoinGecko. I interviewed Bobby Ong last night, and he was just describing the same thing we see at Zapper. It's chaos. It's just, there's so much to update, and always new blockchains and cryptocurrencies.
So let's round this down. That's somewhat simple. And so that's 0.01 is as a percentage, which is times by 100 to get the percentage. But 1.5% of the Rune is actually staked into the network, right?
Interesting.
Which is out of the market cap of $1 billion. It's back here. 1.54. Let's keep that in mind. Times 0.0154. Doing this numbers on the fly. Hopefully I get this math right. That is, let's see here, 16 million. I think. Am I right? Yeah.
I think so. Yeah. I was gonna say I won't be challenging any of this. I was some of the numbers. I mean, this is actually something I could envision being on like the Delphi dashboard on ThorChain.net. It's an interesting number because it relates back to some of the like core tokenomics that we talked about. So
yeah.
Cool.
So if you get your 16 million, that is approximately, where did I go? Here I am. Half of what's pooled.
Half of what's pooled. Okay.
Oh, I'm sorry. Well, this is the asset and the room. And so the room value is equal to that 16.
Got it. So we're so when we talk about that 3x multiplier, where are we in relation to that?
Yeah. So the 3x multiplier, if you were to do, let's see here. If you were to do, let me get too bogged down in this, but let's do this again. Divided by 2 is this. That's the number thing. Divided by, that's the number of room. Divided by 452. That was 3.6 million. Yeah.
Yep. Yeah. 3.6 million. Yeah, you got it.
I'm putting myself through a mental loop here. And then so since we only have, instead of having 1/3 of the circulating supply of room staked in the network, and we only have, 1.54, the multiplier is higher than 3x, right?
I got you.
So the total number in terms of dollar value was, what was staked was the 16 million, right? Of like the dollar value of the non-Rune assets underlying the network, 16 million. But it only has, instead of having 1/3, it only has 1.54. So the multiplier, instead of being 3x equals 1 billion, which is not the correct here, it's some other number, which is going to be much higher than 3x. It's going to be, I don't even know the numbers off the top of my head. It's going to be some huge number. That's only because there's so much room that's not participating in the network at this time.
Yeah, interesting. And when we talk about the dashboard you were showing where we're over bonded, you might have already covered this, but I think my takeaway that I was wondering here is what incentivizes us getting to less over bonded, or is this just fine to be over bonded?
It's actually fine to be over bonded. It's actually positive for the network as a whole, because it means that there's more room at risk than relative to the assets that are being staked on the network. So it actually means more security in a sense. But what normally would happen in normal circumstances, where we push it back down, is that the people who are running nodes are earning less income, and the people who are staking the network are earning more income, right?
Interesting. Yeah. Okay, so more over bonded, people who are running nodes are earning less, but those that are LPs in BEP-swap right now are earning more. Now, interesting.
Here's the interesting problem here, is that because every pool has Rune in it, right? And Rune has been doing like crazy well. Like if you look at the ThorChain chart,
that's an understatement.
It's doing extremely well, right? Yeah. And so impermanent loss plays a bigger role when Rune is doing like so freaking well, right?
Yeah.
And so because it's doing so well, like some people are pulling out and not providing liquidity because the impermanent loss is at a higher percentage, because Rune's like going apeshit crazy, just going to the moon, right?
I want to remind everyone though, like, and I'm not, this isn't financial advice. I'm not encouraging folks to do this, but a strategy that's really common in DeFi is, if let's say you're participating in Rune and you want to remain active, but if you, let's say like you have a large amount of Rune and you'd like to rebalance some of that, this is where impermanent loss can actually be your friend, but you're also helping Rune, or you're helping ThorChain, because you're providing liquidity. So in other words, that impermanent loss can be your friend. This is something I did recently. I went into a Bitcoin Rune pool and an Ether Rune pool, because I was like, actually, I think impermanent loss would be a bit of my friend here. I'm a little, what teeny tiny position I have has grown more than I ever expected. So yeah. It's something to consider. That's not financial advice. Don't do your own research, but
no, you're right. Do your own research, of course. I think what sometimes happens is, as like Rune torpedoes up like crazy, people get more impermanent loss and they kind of freak out and unbond, and then unstake, and then the staking amount goes down. And you can see it on the graph here. Like, go back to the devswap.com here. You can see the bonding amounts here.
Oh, interesting.
You can see that like this is when Rune started to take off, right? And really started to see some really positive moves upwards. And so people started to pull out a little bit, right? Because of that impermanent loss. The reality is like if you say you're in the Bitcoin pool and you have Rune goes up like crazy and you lose, it gains a lot of value and you're experiencing some impermanent loss. You know, next week when Rune kind of reverts down to the mean, so to speak, and kind of comes back off of its highs and back down low, the impermanent loss that you lost, you kind of gain back, right, in a sense. Like you don't actually lose the impermanent loss. You only actually get the permanent loss when you actually leave the network. Right? You're like,
it's impermanent.
It's like if you buy a bunch of Apple stock and it like goes to zero, or not zero, it goes to like $10, like really low. You actually didn't lose any money. You only lose money when you sell the Apple stock. You know what I mean? And then because the next day, you know, Apple goes back up to where it was before, and you're all fine, you know, financially speaking. So, and permanent loss functionally is very similar to that. That when you experience permanent loss because we're going through some sort of big wave up, when it gets a reversion to the means, which you know crypto does in general, and ThorChain's no exception to that rule, or Rune rather, you kind of gain back that impermanent loss that you did experience. So people kind of get freaked out when it does so well, right? And because it kind of Rune's success is kind of hurting it in some sense from a perception perspective.
Yeah,
in reality doesn't, but like in perception, that's true.
Impermanent loss is just it's a pain, and it's one of those things where you know, no matter whether you're in BepSwap here, whether you're in Uniswap, SushiSwap, whatever, there is this challenge of, you know, I would say people mostly want to see markets go up, of course. But if you're a liquidity provider, you know, when markets go up, especially if one of the two tokens goes up that much faster, because we're always thinking of the relative price. So when they diverge, that's when we feel the pain. We ideally want to see two tokens that remain correlated. I mean, that's the dream, like, is if you can get into a pool where there's high trade volume, and so you're earning more from the fees, but you've got two tokens that are following each other up and down in price. And that is why stablecoin pools and like assets like synthetic ether and ether are really interesting. Chad, there was one other follow-up to just the Rune token. And I don't want to force you too into the weeds with this, but you know, when I was researching ThorChain, one of the things that stuck out is it did, in a sense, remind me of parts of Ren, and so I'm just curious, like, not that you need to call up every, like, you know, similarity and difference, but yeah, are there any like highlights to say, like, well, this is the difference in the value accrual mechanism behind Rune versus like a Ren, or anything else just from like a user standpoint that's worth knowing?
Yeah, I mean, Ren and ThorChain have some similarities, right? For example, they are both doing some form of cross-chain. And both Ren and ThorChain are securing assets via threshold signatures, right? And just to give the people, so that they don't know what threshold signature is, it's very similar, conceptually similar to a multi-sig, but a bit different. So in a multi-sig, if you actually did a multi-signature transaction on Bitcoin, let's just say, and you actually like look at the block itself, you'd see like, okay, there's a 3 of 4 multi-sig, and we see the 3 signatures that make up that transaction. And so you can definitively know, like, oh, who signed it? Out of the 4 people, okay, person A, B, and C signed it, but not person D, right? Multi-sig is a little bit different in the sense that instead of like having 3 different signatures that are used to authorize a transaction, these 3 individuals combine together to create a single signature on the chain, so that it is indistinguishable to know who within those 4 individuals actually did the signing, right? In addition, you don't actually need a chain to support threshold signatures, but you do need a chain to support multi-sigs. So
interesting, yeah.
They look identical to any other transaction that you might see on like Bitcoin, for example. So if you showed me a signature on Bitcoin, like I could not tell you whether or not it was a threshold signature or it was just like some guy's, you know, wallet or whatever, right? You cannot differentiate between two, which is a really nice thing. So that's part of the reason why we chose to use threshold signatures, is because we don't need to wait for Bitcoin to support multi-sig, or chain B or chain C or chain D to support multi-sig. And even if they do support multi-sig, they support it in different ways, in the sense that, like, on Bitcoin, you can only do up to 20 people in a multi-sig signature, right? Versus for multi-sig, for a multi-threshold signature, you can do as many as you want. You can do 100, you can do 1,000, you can do 10,000, whatever crazy number you want to throw out there, you can do. So Ren and ThorChain both use threshold signatures to secure those assets, right? One of the big differences is, though, is that, like, Ren's actually not quite decentralized yet. They decided to launch in a way that they run the nodes, they have all the keys, and they can combine themselves in a way to, theoretically centralize those keys in a way that they could theoretically, on paper, steal. I'm not saying that, why don't you do that? I'm not like,
yeah, no.
Someone yell at me about FUD or whatever.
No, it's well framed.
Good project, and those guys are good guys, whatever. But
I love the guys protocol. That's just reality, and they haven't shied away from that. And I always talk about it as like, it's like a journey to decentralization. Some accelerate that journey. Some it takes more time, and it's hard because, like, even in the last few years, we've all learned hard lessons at times. Sometimes you look at a team and they're on the journey to decentralization, but they're not. And I do believe, I found it really interesting just kind of seeing what Ren's done, what you guys are doing, and other like major DeFi protocols on Ethereum. So yeah. Well said. I want to end with, like, what is coming next, because there's isn't V2 is coming up, and we talked about the BEP swap. Like, there's opportunity there for one to, well, if you have a lot of Rune, you probably already know you can run a node, but otherwise there's being an LP, or there's trading. There's that opportunity to actually trade there. What is next? When is V2 coming? And if there's any other milestones with, like, even estimated dates, just kind of curious to understand those.
Well, so before we can do V2, we need to actually properly launch V1, because Chaosnet is just kind of like a proof of concept thing.
Good point.
V1 is being launched very soon. We're thinking internally between 4 and 6 weeks, approximately, give or take, depending upon how many bugs or issues we find in testnet. We just launched testnet earlier this week, I think it was, where you can actually swap between Bitcoin. We support 5 chains: Bitcoin, Ethereum, Binance Coin, Bitcoin Cash, and Litecoin. All 5 of those coins are currently supported. We're currently working on Dogecoin as well, adding that to the mix, which is pretty cool. So we're going to launch later, kind of the first V1, if you want to call it that, hopefully in like 4 to 6 weeks time period. Once that's launched, we'll continue to maintain it. We'll kind of add more chains. We're talking to Haven and Monero and Zcash and Polkadot, and like lots of other chains are very interested in adding to this network. And so we're going to be doing that, working on that.
What work is being done with Sushi Swap? I remember, like, either like there was an equivalent of Rune that would be available to trade on Sushi Swap, but is there any like collaboration that's going on there that we can look forward to?
Yeah, absolutely. For one, the team did launch an ERC20 version of Rune that you can pick up on Sushi Swap or on Uniswap. You can buy it today if you really want to.
That's easy.
I think Sushi Swap made an announcement a few weeks ago or a month ago, whatever it was.
Yeah.
They want to integrate into ThorChain itself so that you can do cross-chain on Sushi Swap powered by ThorChain, right? That's something they're intending to do in the future once we launch our kind of V1, if you will. We'll see how that goes. I'm very fascinated to see how that goes. Whatever can just pass more volume through ThorChain.
Yeah, it's another gateway into it. I mean, that at the end of the day, for folks that are like really still newer to crypto, to DeFi, you have to understand that like these protocols are like, this is like the highway, and there's a lot of like on ramps to that highway, and even like BEP swapping is an example of that right now. But you will look to have, like, the goal is for you to see many folks building with the ThorChain protocol, so that
and that's actually a really important point that I want to stress, is that ThorChain as a network is not really like owned by me or even the people that I work more closely with. It's contributed by a larger community. There's probably over a dozen different projects out there being, well, the block explorers, right, and like UIs and like all sorts of things being built around by the community. And even the kind of the team is planning a planned obsolescence in July of 2022, where we're just going to basically disband and just push off the entire project into the community. So it's important to kind of separate, because even like adding chains like Polkadot, like we're not adding Polkadot, we're not adding Monero, we're not adding these things. It's actually being contributed by other kind of satellite teams, if you want to call them that.
Interesting.
To kind of help build in that. And we're, as a team, we're taking our treasury to fund these things. We're actually giving out, money to other teams to help build a dev community around ThorChain to help build it up, so that when we actually do kind of disband and the community is ready to take it over and continue to work on it.
So one last question on, those next steps. If one is an LP in BEP swap, right now, what will they need to do in the coming 4 weeks? Whenever this V1 is launched, is there any sort of like migration that they should be looking forward to? I know you'll have more specific instructions. The community will have those, but just kind of wondering what to look forward to there.
So Chaosnet will continue to exist after we launch the V1, ThorChain V1, if you want to call it that, multi-chain launch. They will be just two separate chains operating isolated from each other that just operate on their own. Over time, Chaosnet will kind of ramp down the rewards slowly over time. And people will just like leave this network and then kind of join this one, especially as the rewards are higher in this one than this one. Eventually, this whole chain will get what we call Ragnarok, the Ragnarok protocol, which basically means that change like self-explodes, like implodes more accurately. And all the funds get sent out to everybody. So if
plus, man, you don't have to explain this. I know how it all works. I know. It's funny when I first started learning about ThorChain, I was like, are these guys like, are they referencing like Thor, like my Thor, like Avengers Thor? Because like that's pretty cool. And then I'm like, wait, is it cool, or are these guys like total degenerates and I should just not pay attention to this? Like, what kind of a team brands themselves with Thor? Like, it's funny. The website for ThorChain.org is a beautiful website. I don't know who designed it, but it's very clever, and it kind of like it plays to a lot of like, I think, inside jokes and like funny narratives within the crypto DeFi community, and Great job to whoever did that.
I mean, it's kind of funny because like ThorChain is very memeable, right? It's got a very memeable kind of position to take, and it's very strong in that sense. But it's kind of, to me, it's like you can be memeable and also like have good fundamentals. Like they're not mutually exclusive. People are like, oh, it's a meme, it's not a real thing. Like it's just a meme coin, or it's like, oh, that's like a good fundamentals coin. There's like no reason why they don't. Like,
no. All the best teams at this point, I think, like you look and you say, it's fun. It's like a way to sort of rally around each other with a community. So no, it's a part of the stack now. Is you got to have memes, or you got to have something that's just easy to I don't know, create a bond between people. And the Thor references are just really funny to look at. Yeah. Well, Chad, anything else that you'd like folks to know? Like I think we covered nearly everything I was hoping to get out there today.
I never answered your question about V2 because I wanted
to
V1 before I jump onto V2.
Lauding the Thor memes, yeah.
No, so V1's launching 4 to 6 weeks, hopefully, multi-chain, depending upon how testnet goes, how smooth it goes. V2 is something we're starting to think of as a team. As V1 kind of delivers on the original white paper of like cross-chain layer 1 swaps, V2 is going to be talking about kind of next level stuff. So we're talking about building synthetic assets, like think synthetic Bitcoin, synthetic Ethereum, synthetic whatever asset that operates on the ThorChain network. You can swap like real Bitcoin to synthetic Bitcoin, and then that being a Cosmos coin, you can send it via IBC to other IBC applications, other DeFi applications in the Cosmos ecosystem, so that they get access to really great liquidity instantaneously without needing to build like their own Bitcoin bridge or these kind of things. That's part of it. Another part of it is talking about doing like compound finance or Aave-like lending protocols.
Yep.
ThorChain has a unique ability to do this because we're cross-chain. We can give you Bitcoin loans. Whoa, isn't that crazy? If you could take a Bitcoin loan, like who wouldn't want that, right? So like there's some things we can do. We're talking about how to implement that internally now. We're passing ideas of how we can do fixed interest loans versus variable interest loans. We may even be able to support both. We'll see. But we're going to be writing a white paper about V2 in the future at some point, and we'll probably be releasing it to the larger community for input and criticism and all these things. But we're going to start working on that relatively soon, as multi-chain gets launched in a month or so. And then we're going to start hacking away at V2, which is going to be great. Because once we have like synthetics on the network, we really open up the development of other people. So if you want to build on top of ThorChain, you want to build your own DeFi app that does X, Y, or Z, like you can do that by building your own Cosmos chain. We may support CosmWasm, is another thing we're talking about internally, of like being able to deploy smart contract likes things onto ThorChain via CosmWasm. That's something we might be doing. There's lots of talk internally about what makes sense for us, what kind of timeline does it all take, technical difficulties, security of the assets, all these things need to be taken into account. We're kind of discussing that now within the team. But there's if you think we're going to just launch layer one swaps and be done and just like walk away, not so much. We have an ability to do something that nobody else can do. We're uniquely positioned in a way that nobody else is, and we're going to definitely prove that in the coming months.
Yeah. It is fascinating to see the traction that you guys have had. And I think, I want to clarify, we were talking, I think over a month ago about doing an interview. It just coincidentally over the last few weeks, like gas prices have been high. And I feel like we've seen a surge of interest in like, hey, where else can I do DeFi outside of Ethereum? But I don't think that wasn't my goal here. Like I have always thought like, the future is interoperable. And so players like ThorChain not knowing what the future is, but like I've just been sort of watching you guys execute, and it's fun.
This is actually critically important that I think a big part of the DeFi community has not quite grasped yet, is that the future of DeFi is not Ethereum. I'm sorry, guys. Ethereum's great. I'm not hating.
All right, interview's over. We're gonna cut chat off right here. That's it.
No. I'm a Ethereum holder, right? I like Ethereum. It's great. All these things. But
okay. Oh, he's okay. Okay, we won't cut this. Okay, yeah. So I'm talking all my assistants behind.
The future of DeFi is being chain agnostic.
Yeah,
that's what's really going to matter. Is like it doesn't matter you walk up with Bitcoin or Ethereum or shitcoin. It's all treated identically. It's all has equal access to the same DeFi applications. That's what's going to be the future of DeFi right there. Rather than trying to pick a horse and hopefully you win. Pick a horse where it's like, it doesn't matter which horse wins, you still win, right? And that's really what ThorChain is. Like, it doesn't matter if Ethereum is the winner or something else or whatever. It doesn't even matter at all, right? ThorChain is agnostic to these things.
To envision, like there is clearly a DeFi metropolis that's on Ethereum right now. But again, like because I see a future too of interoperability, it's like there's going to be multiple blockchains that I believe are going to fulfill different purposes. But at the end of the day, like to be able to move in between them, like why would you not want to do that? I do think like the Ren bridge did us all a humongous favor, and it advanced everyone's understanding of the demand and urgency to be able to move, at least in this case, Bitcoin back and forth between Ethereum and Bitcoin. And so you have a much more sort of elegant design here that's being put forth. And so it's very interesting to think just beyond, I'm not comparing Ren and you guys, but think beyond just the Bitcoin Ren bridge and what other work they're doing. Like I'm very interested to see what happens. But yeah, it's
And by the way, like ThorChain can connect to layer 1 protocols, but there's no reason why it can't connect to layer 2 protocols as well. So if you want to swap from one layer 2 like optimism thing to another layer 2 Lightning Network, right?
Right.
Sure, why not? Like to ThorChain, they're identical. They're all first-class citizens in a matter of speaking. So it's completely able to connect to any chain. I mean, theoretically, you could connect ThorChain to an Excel document if you really, really wanted to. I mean, you would never do that because it's ludicrous and stupid for many reasons.
It's the
but
best.
You could do that. You know, you could connect ThorChain to the New York Stock Exchange and actually create synthetic Tesla stock or Apple stock or Amazon stock on ThorChain. Totally can do that. Whether we do that or not is a different conversation and topic. But like, it can connect to any data source. It doesn't even matter what it is. So layer 1, layer 2, New York Stock Exchange to ThorChain, they're all basically identical, and you can feed that data into the system, no issue.
Actually, I was thinking about this earlier, and I forgot to ask you this. So I guess doesn't matter that, like you were saying, like there's all these possibilities, but I mean the reality is there's really 2 pseudo 3, I'll say, vibrant blockchain communities right now, and that's Bitcoin and Ethereum are far and away. I mean, Ethereum, and again, I don't want to compare the two because apples and oranges, and Ethereum just has so many more applications. But if you're building a highway that is ThorChain, I mean, I guess like, what if, there are no vibrant cities to get off at? And I guess like, I mean to say, does this in any way affect the future development of ThorChain right now? Like, is that of any concern?
I mean, it's not a concern to me personally. The crypto sphere is only going to get bigger, really. Like,
totally.
We passed $1 trillion market cap for crypto in general, a month ago or whatever the number was.
Yeah.
And we're going to hit 10 trillion. We're going to pass gold. Even Bitcoin by itself is going to surpass gold in market cap like in the next 10 years, right? So, they're only going to add more economic activity or economic value. And so for the ThorChain network, it wants to connect to chains that offer economic value, right? It doesn't want to connect to some random chain that has, like no throughput, no trade volume. It wouldn't add much value to the network as a whole. And so it'll connect to whatever the community wants to connect to, whether it be Bitcoin, Ethereum, or some other chain that gets invented a year from now. It doesn't even matter, right? I don't see like a lot of people are maxis, Bitcoin maxis, Ethereum maxis. I'm not even a Rune maxi, to be honest with you. Like, Rune's great. I'm obviously heavily involved.
It can be. I think when you're working on what you're working on, you do have to believe in that. And I will say, it's, as someone who I'm focused on Ethereum about 99.9% of the time, it's difficult to discern, like, okay, when should I be paying that much more attention? And so like the easiest transition to that, again, none of this has to be financial advice. I have found you guys in Ren to be very interesting to follow, and enough so that I've participated in the swap before. So,
you can look at ThorChain as like building the highways between chains.
Exactly.
Everything's an isolated island right now, which is not the greatest thing we want. And if you want to get off that island to another island, you got to go to Binance.com or Coinbase.com or some centralized entity where you have to KYC your identity and do all that kind of crap that none of us really want to do per se. But all of a sudden you have something like ThorChain in the mix where you can get in your own car and drive across this highway and get to the Ethereum island whenever the hell you please, without being censored, without asking permission, or any of these things. That's exactly what the community wants. This is like one of the unicorns. This is one of the kind of golden, trophies that we're trying to look to get for ThorChain. One of the top things, and I think ThorChain is going to provide that in a way that's really important, not just to Ethereum community, but obviously including them, but to the Bitcoin community, to the Binance community, to the Ripple community, to the Bitcoin. Like I'm not even going to comment on whether these chains are good chains or bad chains or whatever.
Yeah.
Economic value. They have trade volume.
Yeah.
Come on board. And again, like, I'm not deciding what chains get added or don't get added or whatever. It's not my role. To decide that information. So I can't even tell you which ones will get added, because it's up to the community to decide what chains get added to the network.
Yeah, I mean, the light bulb moment for me in the past year was, I mean, we kind of discussed it there, is I moved some Bitcoin trustlessly, yeah, through the, and again, we talked about some of the centralized factors behind Ren that they've been very transparent about, but I moved some Bitcoin and I was like, whoa. I just remember that is the coolest thing I have done. Oh my God. Like, it reminded me of the first time I did like a crypto, like any sort of transfer, which I think it was either Bitcoin or Ether. And so I was like, okay, so this is real. And I was basically telling everyone I knew, I'm like, this thing like works. And I went from who gives a shit about an interoperable future, because it just doesn't feel like we're anywhere near it, to like, well, I mean, this is working. Again, I recognize there's some risks here, but still, like, let's just call it what it is. It works. So now there's like there's 8.2 billion in USD value in tokenized Bitcoin on Ethereum, and also worth noting, Bitcoin clearly has gone up a lot in price, but that was just in Bitcoin. There was 140x increase year over year from January 2020 through January 2021, and now there's 174,000 Bitcoin. So I mean, it's exciting that the product demand, the urgency for it is there. I'm just really interested to again see you guys move to that next step. And I'm
interested to see how people respond to the idea of like being able to have DeFi directly in Bitcoin, not needing to go to Ethereum, then you have access to DeFi, but having access to DeFi on Bitcoin itself, right? And that's effectively what ThorChain is doing in some sense, because you don't need to trade to some other asset to be able to use that thing in some sort of DeFi app. You can just take your Bitcoin, provide it as liquidity to the network, and earn more Bitcoin.
Interesting.
You don't need to trust some bridge and then to trust an ERC20 contract, that call it RenPC, for example, to make sure that's developed in a good way, which I'm sure it is. Again, not putting any foot on it right at all. But like, you add extra layers of risk when you use a bridge to Ethereum and then the Ethereum in the smart contract. Like it's actually adding additional risk where you're using less risk when you use something like that's directly to something like ThorChain. So I mean, you can see how that happens.
That out, Chad. What I always try to call out the risks. What are the risks that that you should be aware of if one participates in BEP-swap, or when V1 is launched here in, let's say, 4 weeks? Like, what are some of the risks that everyone should be aware of in advance?
Oh, yeah. Well, there's not without risk, obviously, right? So one of the risks we talked about before is impermanent loss. If you're going to be a provider, that's one thing to be knowledgeable and do your own research and understand the implications of that. Another thing is to make sure that you're swapping via a UI that you trust, right? Because the UI can say, okay, we're going to swap your Bitcoin for Ethereum now, but then send your Bitcoin to like some other place, right? And then you're just screwed. Sorry about that. So make sure you use either a wallet or an interface that you're a fan of or can trust. Over time, more wallets and exchanges will actually integrate ThorChain directly in the wallet or right in the exchange itself. And so your wallet would be, Ledger or this or that or whatever. Will probably, my hope is at least, is that it'll gain ThorChain support natively, and you don't even have to worry about it anymore. I mean, there's that obviously risk as well. There's the risk of the network itself being manipulated or hacked in some way, right? Whether it be a security hole and special signatures, which again, we're like on the bleeding edge of this. Like, we're literally leading the pack, and a lot of other people using special signatures are looking at our code as a way of showing the path forward. So we are literally on the bleeding edge, and with that comes risk, obviously, right? So there's special signatures. There is maybe some sort of bug in the actual ThorChain code itself, like the actual swap logic or something of this nature. Bugs exist. We've done audits. All of them come back A-okay, but you never know, right? There's always unknown unknowns, and that's what keeps me up at night, is like not knowing if there's an unknown that like is some issue with the network or something that we haven't discovered in the last 5-6 months, whatever it's been, of like actual economic activity. But just like Bitcoin or anything else out there, with every block that gets added to the committed to the blockchain, it reduces the likelihood of there being some sort of exploit or such a situation. Like we don't actually support flash loans, for example, so that kind of attack vector cannot really be applied to ThorChain, which has been like in half of all the exploits in the last year have been due to
That's generous half. It's been most of them. Yeah.
It's a huge, like, making capital not worth capital, like require capital for capital is kind of an important thing, at least in my mind. I don't understand really. I don't know. I'm not into flash loans personally. I just think it's a little bit.
Oh, we could totally talk sometime. I originally was like, why do we have these? And when you start to do credit swaps, debt swaps, you can do some pretty like magical things that, there's not even a parallel really in traditional finance. Like you can, being able to, I think sometimes people demonize things like leverage, but I'm like, well, there are less risky ways of using it, especially when you have like a leveraged stablecoin position. So now I went through that journey of like, what is the point of this? It feels like it's just like a tool to exploit, but it's weird because I feel like those attack vectors have, continued to make DeFi on Ethereum, I think, stronger. It's weeded out. There are a few protocols that did die because of this, and probably rightfully so. Quite a few of them too have, like most of them actually, I was naming a few today, have come back, I think, stronger. And it's just such early days still. Like we all, what you guys are doing, like years from now, no one will talk about a lot of what we talked about today. It'll just be like, and I swap assets and I don't know what's underpinning it. Just, leave me alone, DeFi dad, you old DeFi boomer. Chad, thank you so much for your time. Like this was awesome. Really interesting just to like learn from you, and congrats on all your guys' success so far. And I want to remind everyone too to follow you and ThorChain on Twitter, and you can learn more at thorchain.org. But yeah, man, anything else you wanted to share before we go?
No, just keep your eye out for multi-chain coming out. It's going to be hopefully an inflection point in terms of the network itself. It's going to be huge. And I think once we do that, a lot of people in the ETH community, the Bitcoin community are going to awaken to what's about to transpire.
It's very cool. Yeah, it's very cool. There's no guarantees, but I've been watching for at least like 6+ months, and yeah, it's good to see a vibrant community with deadlines being executed, and just it takes time though. People are so impatient in our space, and I'm like, like ETH2 takes time. Implementing V1 with ThorChain takes time. It takes time for DeFi protocols to become truly battle tested. Like everyone wants it overnight. I'm like, go back 3 years ago, it was rough. It was like, so like there's digital money and you can like transfer it and it's going to change the world. And it was, I was the person saying that, but now we have all these applications, and adding like an interoperability Lego, another one, is just fantastic. Amidst all the other things that you guys are considering doing as a community. So I want to, just remind everyone that was, you can check them out at thorchain.org. We also looked at thorchain.net. That was a different website, but there was lots of interesting stats there. And Chad, I'm going to literally just hit the outro video on this. So we'll be in a green room in a sec. But everyone, thanks so much for tuning in. Have a great day. Bye.
Hey guys.